Good morning, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on Tuesday, the 17th of January, 2017. Thanks for coming back and listening in to another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Some of the key news overnight was the um, presentation by the UK Prime Minister Theresa May saying that she's against any deal that leaves the UK half in, half out. They're calling that hard Brexit. Also, Davos is in full force. The president of China, Xi Jinping, has given comments, and the key comment I tweeted saying no one will emerge as a winner in a trade war if a trade war is initiated. Overall, that's that's really what's driving us. The Saudis have released a statement saying they'll likely cut the production cuts are likely not to last past June because of the level of compliance that they see. Although I kind of get conflicting reports from Stratfor, but that's the crude has gapped up this morning. Crude is trading February currently up 1.5%. Okay. And as far as what we're expecting going forward, shoot, I just closed that window by mistake. The week has a few events that are fairly important. Coming into today, we're looking for a Fed Speaker Williams. Fed Speaker Dudley's currently speaking. Fed Speaker Williams is speaking after the market. But tomorrow we're getting US CPI. Um, We're getting US CPI and industrial production, as well as NAHB housing market index. We're also getting Fed Speaker Kashkari, and we're getting Fed Speaker Yellen in San Francisco at 3 o'clock Eastern. That's an hour before the close. On Thursday, we're looking for housing starts, building permits, Philly Fed. Thursday also gets us the ECB rate announcement at 7:45 Eastern with an 8:30 press conference by Draghi. If you are trading treasuries or the euro currency or any currency, that's an important. That's your key event for the week. Friday is fairly clear on economic releases, but we do get Fed's Yellen again. I think it's Thursday night actually when she speaks. Thursday night at 8 Eastern, I believe. I'm not really sure. We get Fed Speaker Harker on Friday morning, and then Fed Speaker Williams. So a fair amount of Fed speak and ECB action this week, but that's pretty much it. So let's switch gears and look at what we expected on Friday. Friday was an interesting run. Again, yesterday was a holiday here in the U.S. On Friday, the expectation was for a quick pop. I did warn about it. You might want to watch this video again from about 11 minutes in forward from Friday, where I clearly state that it's a very precarious position that the market's in for anyone who is short or holding short positions. That it's important to cover on the open. Expected a pop out and above on the open. So the primary hypothesis for Friday is to if it is going to open in range, that there would be an open auction. Was looking for 2265, which is the MC point of control plus the point of control the prior day, which was a reversal trend day, a neutral extreme day actually. Looking for that as a base. That's a really good base there at 2265. I was looking for it to push higher. That was the primary hypothesis. Failing that, I was looking for a pop higher immediately, as you see here, and then for the market to slowly work its way back to 65 and potentially to push through to the overnight low, which was 2262.75, and tag that. What we got on Friday was a combination of both. We ended up holding, we ended up getting a drive on the open with a burst with an impulsive move and the extension to 73.50. Then we sat sideways. This was pretty deadly here, very quiet chop. And then the market rotated back down. And as long as I said on Friday in the trader bite, as long as it does not fall back into the prior day's range, it's likely to continue higher. And I was looking for 77 as the upper target. Didn't quite get there, but you could see here it bounced into the prior day's range and then held and then continued to go higher. Friday was a completely balanced day. You can see that the profile is Gaussian with the value area right in the center, and another clear indication here is that the point of control is on top of VWAP, which is on top of the mid. Again, for those who don't know, the mid is this blue price, blue line. It's very important. VWAP is this cyan line, and the point of control is pink. Mid is very simply the average of the high of the day and the low of the day. So the high minus plus low divided by 2 gives us the mid. And I use that as a very important measuring stick for how the market's performing uh, in swings or in the day. So that's what Friday gave us. A fairly bullish close. We closed right near the top, up against the high of 2016. Looked very strong. On the futures, Friday closed 4 ticks higher than the prior Friday. So what we did last week, and we'll go over that in a minute, we dipped all the way down to 48, and we came all the way back up to close up by 4 ticks. I see that as fairly bullish. However, somebody pointed out, and it's true, that when we look at the SPX, let's resize these panes here. When we look at the SPX, we find that between Fridays it actually went lower. This last Friday closed lower than the prior Friday. So overall, though, the SPX still looks very bullish. We have the market had made a high up here and is holding this trend, and it's keeps banging away at the top here. I know some people will look at this and we'll look oops we'll look at this and see it as a ascending triangle, and it's likely to break lower. But what I see here, based on how the profile is shaped, so you can see down here we have moved the point of control on the SPX based on time, because there is no volume in the SPX. We've moved the point of control to 2092 from way down here. We have spent a ton of time in this range to build this point of control, and now we're above there until it gets below, gets down here, retests, gets below, and then fails to break higher. We're looking at, and then the next target would be around 1725. We're fairly bullish here. I'm not seeing just macro picture. I'm just not seeing how this is weak, right? Other than that, looking at the overnight to shape up our day, the overnight has been lower. It has been very balanced. We did get a spurt down on, I believe it was this happened before May spoke. So the move down occurred, I believe, on the zoo number or something like that. Um, yeah, I believe it happened around the zoo figure out of Germany. But the market has recovered and is looking strong. So today, this morning, It has tested all the way down to 57.50. Most of the volume has occurred up high, but we're still below the prior range and the prior point of control. So it's trying to reverse on the overnight. But this configuration here, we have an impulse that is unfinished. I'm expecting responsive buying back into the 2265, which we're right there at 2264. We're in the point of control. And I'm looking for it to push back up into 70 and a quarter this morning. That's how things are shaping up right now. Looking at the for a bigger picture view for a moment, looking at the weekly again, we're one time framing up. We're still one time framing up. We keep putting higher lows in. As I said, we dipped down last week, and we finished right near highs. That asterisk there is where we finished. We finished above the prior 2 weeks worth of point of controls here. Again, this is fairly bullish. It is not showing signs that its buyers are not stepping aside at the moment. Buyers, in fact, are showing up every time we dip down still, which we've been doing for about 8 years. So there's nothing here that says look out below. This is really as simple as um, as a market buying dips still with a lot of volume. So you can see this point of control is right against the 65. There's a point of control right against the 65. Here's a point of control. It's a little bit higher at 66, 67, and then the point of control is moving up. So you could see that. So you could see that there's a lot of confluence here at 65, and that's where we're opening. So I'm looking for noise. So this morning, the opening auction is likely to be an open auction out of range. I'm expecting it to chop around. I'm looking for a dip. If it gives a dip down, that's a great opportunity to get long. I'm looking for it to push back into the prior day's low, which was 66 and a quarter, see some resistance, and then ultimately push back to the point of control, and that becomes the key target for the day. That's very little range. It's only 7 points. So don't be surprised if we start to move towards the upper end of the range here at 72. Once we take the 70 out, that is my hypo 1. So open auction. If we get an open auction, look for a dip to buy. That's my plan. I'm not telling you what to do. Look for an option. I'm going to look for an opportunity to buy, something to lean against, pushing back up against the prior day's range, or it might push straight up. The second hypothesis is likely to be open, push straight up, struggle. If it's not able to take that prior day's range and hold, and it breaches the opening swing low, I always post the opening swing at the open, comes back to the open and then is not able to push back through so that it comes back to the open and it cannot find the buyers to bring it back up, then I'm looking for it to dip lower. And the purpose of dipping lower is to find buyers. So that's hypo 2, and that sets us up for potential run up tomorrow. Remember, Tuesdays generally are the most active days of the week, followed by Friday, I think, or Thursday. I don't remember. I did a study on the ranges a while ago. But Tuesdays where most of the action is during the week, so I'm expecting a little bit of movement today. And we're getting some speakers and stuff later on. So we'll see how that plays out. That leaves us with the plan. And also, I want to remind you that next Tuesday, I'm doing a webinar on order flow. I'm going to fix what I tried to show, which I think is an important lesson from December 13th. So January 24th, you'll see a tweet on that. It might be a prepackaged video that you sign up for and it's sent to you when it's ready. But I wanted to get that message out and get traders to think using, no matter what you trade, whether you're scalping or you're trading swings or whatever, at some point you have to interact with the market. You have to enter the market, and essentially using order flow, or at least having an idea and looking at order flow, helps you find an edge in your entry, not in your trading plan, button your entry at least to give you a better opportunity to take the trade and manage it. So I'll go over that. It's really important stuff. Just keep an ear out for that. Other than that, good luck, and I'll catch you tomorrow morning. Take care.